Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Tuesday, the EURUSD pair attempted to resume its downward movement after completing prolonged upward wave. But neither bulls nor bears showed much willingness to trade. As a result, the new day began around the 50% Fibonacci retracement level at 1.1745. Today, a consolidation below 1745 would favor the US dollar, and a new attempt by bears to move toward the 38% Fibonacci level at 1.1666. A consolidation above 1745 would allow for a return to the 61% retracement level at 1824. The wave structure on the hourly chart currently raises no concerns. The last completed upward wave broke through 6 previous highs, while the new downward wave has not even come close to the latest low. The 2-week truce between Iran and the United States supported bulls, allowing them to form a strong upward wave. Thus, the trend remains bullish. In the near term, the geopolitical backdrop may deteriorate again, which could give bears more strength and confidence. However, to reverse the bullish trend, 2 downward waves or a break below the April 6th low will be required. On the 4-hour chart, the pair rebounded from the 38% retracement level at 1.1849, reversed in favor of the US dollar, and consolidated below 50% Fibonacci level at 1.1778. Thus, a decline may continue toward the next retracement level at 61%, 1.1706. A consolidation above 1778 would allow bulls to launch a new advance toward 1849. No emergent divergences are observed in any indicators today. Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents. Today you could plan to buy the pound when the entry point is reached around 35.31, targeting a rise to 35.59. Around 35.59, you could exit the long positions and open shorts in the opposite direction, expecting a 30-35 point reversal from that level. The pound may rise today within the bullish trend. Before buying, make sure that the MACD indicator is above the 0 mark and just begun rising from it. You could also plan to buy the pound today if there are 2 consecutive price tests of 1.3513, while the MACD is in oversold territory. This will limit the downward potential and trigger a reversal upward growth toward 35.51, and 35.59 can be expected. You could plan to sell the pound today after a break below 35.13, which would lead to a quick decline in the pair. The key target for sellers is 1.3476, where you could exit short positions and immediately open long positions in the opposite direction, expecting a 20-25 point reversal. Pressure on the pound may return today if the US and Iran maintain a hard stance. Before selling, make sure that the MACD is below the 0 mark and just beginning to decline from it. You could also plan to sell the pound if there are 2 consecutive price tests of 1.3531, while the MACD is in an overbought territory. This will limit upward potential and lead to a downward reversal. A decline toward 35.13 and 34.76 can be expected. That's all for today. See you online soon.